All right, so you've made it. This is the home stretch. And if you're watching this, first off, a huge congratulations. You are so close to getting the keys to your new home. Over the next few minutes, we're going to decode the single most important document standing between you and those keys, the closing disclosure. You're probably looking at this 5-page document, and it feels a little intimidating, right? Well, think of it like the final boss battle before you get the big prize. It's called the closing disclosure. And today, we're going to walk through it page by page so you can sign on that dotted line with total confidence. So what is this thing exactly? The closing disclosure, or CD for short, basically locks in all the final official terms and costs for your mortgage. But here's the most important part, and I mean the most important part. By law, you have to get this document at least 3 business days before you're scheduled to close. That's not a suggestion, okay? That is your legally protected time to review everything. So take a breath, because there's no need to rush. All right, let's dive in, starting with page 1. Think of this page as the high-level summary, kind of like the spec sheet for your entire loan. It gives you all the most important numbers at a quick glance, and it's your first major checkpoint. Okay, these are the numbers you need to check immediately. Go find that loan estimate you got when you first applied and put these 2 documents side by side. Does the loan amount match up? Is the interest rate exactly what you agreed to? And does that monthly payment for principal and interest look right? Oh, and this is critical. Look for prepayment penalty and balloon payment. For most loans, you want to see a big, fat no right next to both of those. This is your first and most important reality check. Let's flip to page 2. So if page 1 was the big picture summary, page 2 is the nitty-gritty, itemized receipt. This is where you see exactly where every single dollar is going. Now, you'll see 2 really important columns here: services you did not shop for and services you did shop for. The costs in that first column, things your lender handles, like the appraisal or the credit report fee, those should be almost identical to what was on your loan estimate. The costs in the second column, though, for things like title insurance or a pest inspection, well, those might be a little different, especially if you chose your own provider. As you get near the bottom of page 2, you're going to find a really important number: total closing costs. This is the grand total of all your loan costs, plus other things like prepaid taxes and homeowners insurance. Now, keep this number handy, because it's the main ingredient for the big calculation that happens on the very next page. And here we are, the moment of truth. Page 3. Honestly, this is the page everybody flips to first, because it answers that one burning question: how much money do I actually need to bring to the closing table? Now, this math might look a little complicated, but trust me, it's pretty straightforward. The form starts with those total closing costs from the last page. Then it adds your down payment. And then, and this is the fun part, it starts subtracting all the money you've already paid, like your earnest money deposit. It also subtracts any money the seller agreed to kick in. You just follow it line by line, and it all boils down to that final, all-important number: your cash to close. We're in the home stretch now. Pages 4 and 5 are where you'll find all the fine print, the rules of the game for your loan. Let's just point out a couple of the most important things to look for here. You're going to see a little section on assumption. All this means is whether or not someone could buy your house in the future and just take over your loan at the exact same terms. It used to be more common, but let's be real, for almost all loans today, the answer here is going to be no. Okay, pay really close attention to this one. Negative amortization. This is a weird, rare feature where your loan balance could actually go up, even if you're making your payments on time. It's a huge red flag. You absolutely want to see no here. Over on page 5, you'll find 2 different percentages, and it's easy to get them confused. Just think of the interest rate as the sticker price for your loan. The APR, on the other hand, is the total cost because it rolls in all the fees and other charges. That's why the APR is always a little bit higher, and it's actually the better number to use when you're comparing different loan offers. So before you grab that pen, just run through this one last mental checklist. First, simple stuff. Are your name and the property address spelled perfectly? Second, go back to page 1. Do those loan terms still match your loan estimate? Third, does that cash to close on page 3 feel right? Is it what you were expecting? And if anything looks off, don't just sit there. The contact info is right there on page 5. Pick up the phone and call your loan officer immediately. Look, in the end, this isn't just 5 pages of boring paperwork. It's so much more than that. This is your home's financial blueprint. It lays out the entire foundation for what is probably your biggest investment for the next 15 or 30 years. Taking the time to really understand it now means you're building your future on solid ground. So the only question left is, now that you've checked it over, are you ready to approve the plans?